Today we're going to look at two relatively unknown dividend stocks that may be a great addition to your portfolio. I think these stocks have a good chance to explode in 2023 and onwards, and stay tuned for the second stock as it's one that I may personally add to my very own portfolio. The first stock that we have is Next Energy Solar Fund, ticker symbol NESF. This is still a relatively new fund. Its inception was in 2007 and it's traded on the FTSE 250, but it only started publicly trading in 2014. So let's just take a look at their website and see exactly what this fund are all about. So straight away, we can see Next Energy Solar Fund is a renewable energy investment company listed on the FTSE 250. It invests in utility-scale solar power plants and energy storage and is driven by a mission to lead the transition to clean energy. I would say that their main competitors are the likes of Bluefield. Is it Bluefield Solar Energy? You know the one I mean, guys. But yeah, they're essentially a renewable energy investment that you may want to add to your portfolio if you believe that, one, this is a good company, which we're going to do a little bit of a deep dive in a second, and two, if renewable clean energy really is the future. Let's just take a look at their portfolio because obviously they're a fund. So let's just see what they actually have within this fund. By the way, guys, if I sound a little bit unwell, it's because I am. The temperature of my flat right now is like 12 degrees. So I think I really need to bite the bullet and actually put the heating on. I just don't want to because it's so expensive. They have 99 assets as of 2022. And that spreads across 8 different geographies, so 8 different areas. So let's just take a look here where that actually is. Okay, so we can see that they're somewhat diversified in terms of geographical location. Not incredibly, it's still very much focused on Europe, a tiny bit international. But let's just take a little look here. So we've got UK just over 85%, and then we've got Italy, Spain, Portugal, and other international. What does other international mean, I wonder? That's something that I'd be interested to know. But yeah, essentially they've got solar farms around different locations, mainly in the UK, but they do have some diversification too within Europe. So you may be thinking, well, why would I want to add this company? Why do they look like a good company to add? And there's a few reasons that I want to point out at this point. Firstly, I would say, broadly speaking, and this really is broad, energy producers and having that investment in your portfolio is somewhat dependable. Not completely, because we have seen that these stocks have been really affected and they've been really volatile a lot of the time, but they're dependable in the sense that in this day and age, people rely on energy, right? People need energy every single day. It's not really something that people think, oh, that's a luxury, I'll just cut that. They need it, and it's kind of essential to most, if not all, people. Another thing that I'll say about this stock is I like the fact that they're diversified. I like that they have solar farms not just concentrated in the UK. There are some of their competitors out there that do have them really, really heavily concentrated in the UK and the UK only. And obviously with just being diversified in general, it's always good to spread around just so you're not seeing your investment tank if one area does really badly, if that makes sense. But yeah, they're not completely diversified. They don't have solar farms all around the world or anything like that. They are primarily in the UK, but they do still have that sense of geographical diversification as well. And just a point, generally speaking, renewable energy seems to be a good investment for the future. If everything is moving towards clean energy, then it may be good to have exposure to these companies that are really, really focused on doing just that. Something to point out with this company that I think is a real positive is that they seem to have high pricing power. And this means that their dividends to their investors are easily covered. I did some research into this and it looks like their dividends are covered at 1.2 times. So that means they have enough cash sitting there to pay their dividends easily 1.2 times. How do I explain this? If they had 2 times cover, they would be able to double all dividends to investors without issue. But they're sitting at 1.2 times, so they can cover it and some more. So that's a really, really healthy sign. And the last positive that I'd like to point out is they're currently trading at a really attractive price right now. So you can see that they're trading at about £1.09 per share. So I think that's pretty good valuation, and I think that looks quite attractive for new investors right now that may want to add this one to their very own portfolio. When we're talking about the upsides of any stock, of course we should consider the downsides and the risk that that stock may have to investors. So I'm just going to point out a couple of those now. I think the main one is that when I was taking a look into their financial annual report, I did notice that this company does have quite a bit of debt. Now, if I remember, I will try and include a link to their annual report in the description below. Another thing that I will say is you need to think about the competitors of this company. Do you think that this company has a competitive advantage over its competitors? Or do you think that maybe a different company is better aligned to your own values and looks better on their financial sheet? Something to think about there. On this channel, we love talking about dividends, and we especially love Dividend Max. So let's just take a look at Next Energy Solar Fund on Dividend Max now. So we can see that they are a quarterly dividend payer. So you will get paid 4 times every single year. And the next pay date due is the 30th of December. You would have had to have been investing by no later than the 17th of November to actually get that payment. But they have quite a nice dividend yield here, 6.5%. I've actually written a little note. It's actually 6.7% when I looked, so I think this needs updating. But that is a pretty high dividend yield. Of course, guys, as I always say, dividend yield is not the only thing you should look at. It's lovely to see a massive dividend yield, but you have to really look at this company and decide whether you think that they can actually keep that up and you're not going to see a massive dividend cut in like a year's time. You know, things to look at. So let's just take a look at their annual dividends. This is a good picture, although we've only got information from 2015, because like I said, this company went public in 2014. So there's not, masses and decades of information. It's still quite a good picture that we're seeing here. We are seeing them being able to increase their dividends I was just fact checking that as I was going, every single year since 2015. So that's a really healthy sign that not only are they able to cover their dividends and pay out to their shareholders, they're able to increase them. And if that keeps going and they look good in general, could be a really good company to have. When it comes to dividend investing, when you first start, it's really hard to actually see how it's going to grow over the long haul, because you have to have a lot of a stock to get paid a decent amount of dividends. But I think if you build that up over time, you reinvest your dividends, you're going to get there. But I like to just have a little look at this. And this is on a website called Dividend Data, another one that I really like. You can basically search for a company here. So I just put in, the ticker symbol. And then you can put in the amount of shares. So let's do 100 shares. And it will tell you how much, roughly speaking, I don't know how often this gets updated, maybe once a day, how much 100 shares of that company is going to cost. So we can see that 100 shares of NESF, mouthful there, is going to cost about £109.40. And we had a look at the share price and we can say that that is pretty accurate. And then what's nice is that you can see how much dividends you will get paid for having that amount of shares. You could obviously sit and work this out. We're just a lazy generation, aren't we? We don't like to do that. So this website is going to do it for you. And for free. I don't pay for this. I don't pay for Dividend Max. It's all free. And it tells you how much the expected dividend payment is per that amount of shares. So you can see that for 100 shares in this company, you're going to get a payment of £1.88 here, £1.88 here. And then obviously there's some differences as, the previous payments were paid, if that makes sense. But you're looking at about £1.88 per payment this time round. So last but not least, let's just look at how they've actually been performing. So over the last 1 month, we're up by 2%. 6 months down by about 2%. So I guess that balances each other out. Year to date, up by 7%. That's pretty good. Considering the current times, pretty good. I guess you've got to keep in mind what type of company they are. 1 year, 8.27%. 5 years down by just under 1%. And if we max it out, we can see that we don't have a great deal of data, but they have been going up slowly over time. They've had some quite dramatic dips, really big one here. So that's definitely something to consider. Maybe a bit of a volatile one to have in your portfolio, but it also could be one that definitely pays off. The second stock, one I'm really excited about, and I'm currently in the process of doing my own really hardcore due diligence on this to see if I want to add it to my own portfolio, is Airtel Africa. Quite a lot of you guys have actually been mentioning this company to me in the comments, so thank you so much. You definitely brought this one to my attention and I'm really glad you did. For those of you who don't know, this is a telecommunication company. Now, they're UK based, but they operate in Africa, hence their name. They are the second largest telecoms operator in Africa, and they're operating currently in 14 different countries. Now, this stock is quite unknown, and the reason for that is they are quite new. They only joined the FTSE 100 back in January this year, so January 2022. This is their website, so we're just going to take a really quick look. In the About Us section, it says telecoms and mobile money services are vital in Africa. By serving our customers, we connect them to each other and to future opportunities. Fine. And when we scroll down here, this is quite a nice website actually. It gives us some really good information straight away. We can see that they are the leading provider. We can see that they're the second largest, literally what I just said. They operate in 14 markets, primarily in East Africa, Central and West Africa. And you can see here as well, they've got quite a big customer base already. And we can scroll down more and we can see some more information on where they're operating and, you know, some really, really good things here as well. I think there are some real pros to this company, and it's a reason that I'm really, you know, looking into adding them right now. I don't really have exposure to the telecommunication sector at all, the communication sector. So I was looking to fill that gap, and I think this may be the company that I want to do that with. But of course, I'm very transparent on this channel, and I'll share exactly if I decide to invest into them, how much I decide to put in, and when I decide to do that. I normally film my investments live. So I film them live and then I post them. So do keep an eye out for that one. But one thing about Airtel Africa is that they are seeing really consistent and strong growth and cash generation, which as an investor, you know, that is a really amazing thing to see. Another thing is that they are increasing the number of customers rapidly. Again, more customers they have, more demand, more money made, generally speaking. The mobile money transactions that are being dealt with by Airtel Africa are up by 32%. So that just shows how much growth potential they really have. And that's because a lot of people in Africa don't actually have access to banks. So, you know, they're looking to do it on their mobile phone, and they are providing them with just that. As well, just in general, the markets that they're operating in, so them African markets, they're markets that have the potential to really push this and see it grow in the future. And obviously they can, you know, move to other different markets in that area as well. So that's really, really promising to see. And now may be a really, really good time to buy into this. Obviously, I have no intention in pushing you and telling you what to purchase. I'm not a financial advisor, and I just, you know, this is all my personal opinion. But they're currently trading at below industry level PE ratios. So it could suggest, you know, do your other research, but it could suggest that now is a good time to pick up this one. So let's just talk about some risks that this company may actually have. They have a little bit of competition. So they have a company called MTN, which is actually the largest telecommunication provider in Africa. And there's also another company called Orange that you may have heard of that again is a competitor to them. And I think the question is, do Airtel Africa have a competitive moat that will make them stand out and do well compared to these other companies that are operating within the same industry? They do also have a little bit of debt. They are attached to a parent company, and that company has quite a lot of debt. So do definitely have a look into that and see if you think that their other financial elements could be attractive enough for you to not ignore that debt, but, you know, push it aside a little bit. I'm going to share a really interesting document that I found on this company at the end of the video, and I'll link that definitely below. And lastly, with the markets that they're operating in, there is a lot of political instability, and that definitely, as we've seen time and time again with stock markets, that could impact this stock negatively. But again, if it's a long-term hold for you, you need to think about what that will mean, you know, over many, many decades. So this is the document that I just was describing. Let's take a quick look at this, and then we'll jump over to look at the dividends of this company. So I think I found this on their website. It wasn't, I don't know if it was too hard to find, but it definitely didn't like jump out at me. But it's really nice. It's a 2-page document with quite literally everything you'd want to know as a potential investor. So definitely something to look at. It tells you what they do, what they are, their strategy, you know, what they're trying to do in the future, and some really, really interesting information at a glance here. Loads of information, like honestly, so interesting. This is what I really like. So they share the last 6 months of financial information. This is essentially information that you would be looking at if you looked through their financial reports, but it's nice to see it just in a snapshot. So you can look at their operating free cash flow, which is something that I really like to look at. You can look at their net debt, again, something else that I like to look at. You can look at how their customer base has been increasing, lots and lots of different things. And you can see how they're performing across different sectors, and across different regions as well. So I do think this document is definitely worth taking a look at if you are thinking about adding this company yourself. Do let me know, by the way, if you guys already have this company or, you're very aware of it and you want to point out anything else to me about them. This company is an interim paying company, so they pay dividends twice every single year. With the other company we just discussed, the Next Energy Solar Fund, they paid 4 times a year. This one pays twice a year. Something to consider. I don't feel like that should be what you base your decision on when it comes to investing, but some people do really like to get paid, as many times a year as possible. Other people don't really care. Okay, so let's just take a look here. They pay twice a year, and their dividend yield currently comes in at 3.3%. So not as high as the one we've just seen, but still a decent dividend yield. Their next payment is coming up in July 2023. So if you do want to receive that dividend, you have to invest by the end of June. So you've got ages to think about this one. I wouldn't really ever panic and invest in order to get the next dividend. Don't let pressure and stress and the fear of missing out ever determine your decisions. Really hard not to, I know, but it's an important point. The psychological impact of investing is quite big. Annual dividends, right? This is where I am a little bit concerned because it's a new company, right? They only entered the FTSE 100 back in January. That means that we don't have a lot of data. And I'm someone that really likes to look at the data when I make my investing decisions. I like to see a company have strong dividend growth over time. And that is something that I can't really tell here because clearly we've not got the data, and the data that we do have is showing us that the dividends were dropped. Probably because, a lot of companies did that, and it might not be necessarily what's going to happen in the future. They might then go on and increase their dividends for 10 years, It's just hard to know. So I feel like if I do end up adding this company to my portfolio, it's going to be a bit of a risky move, and it's not something that I tend to do. One of my points that I really do look at is, have they been able to sustain and grow their dividends over time? I'm not really going to be able to check that box off with this company, but I still have, the gut feeling that I should be adding this one. I'll keep you guys updated, of course. I didn't mention it before, guys, but Airtel Africa's ticker symbol is AFF. If you were to buy 100 shares, we can fact check this in a minute, it will cost you around £118. And you will get paid 2 dividends a year, like I said, and you can see here how much they've previously been paying for those dividends. So the payment that's just happened was £1.89, and the final payment, so the one that came in the back end of last year, how do I explain this? They pay twice a year. They pay in July and December, so we haven't yet seen July's payment, which is the final payment. July's payment, the final payment last year, was bigger than the interim payment, which tends to happen, and it came at £2.45, which is quite a nice amount considering how much it costed to have 100 shares. That didn't make much sense. I'm sure you guys follow. Actually, just looking at this, when I looked at this the other day, I think 100 shares cost about £121, not 118. So the stock performance must have gone down. The share price must have gone down over the last few days. But let's just take a look. Let's look at the chart. So here we are. Let's have a look over the last 5 days. Okay, yeah, that's what's happened. That's why it's dropped. Actually, the share price is less than 118 now. So it would be even cheaper right now than it was a few days ago. We're only talking pennies, of course. So it's about £1.17-ish per share to buy this company. Over the last 5 days, we're down by 4%. Over the last 1 month, down by 1.75. 6 months, it's taken quite a hit, down by 18%. Year to date, down by 16%. So again, quite a big hit. And let's just max it out here because they really haven't been trading very long. So we can see that they first came to the FTSE 100 in, I said January 2022, didn't I? So they joined around this sort of time. But this is the data that we have. So let's just see how they've been doing over the whole time that they've been trading. 73.75% increase. So that's really good, really, really good. So those were two companies that I think are relatively unknown that you may want to think about adding to your own dividend portfolio. Let me know if you've already got these companies, you have any thoughts to share, or you'd like to point out any other relatively unknown companies that dividend investors may want to take a look at. Thank you so much for watching. I'll see you very soon in the next video.